So yes, welcome to the Contrarian Capitalist midweek macro. I appreciate that a lot of people that are going to be watching this or listening to this are going to be from the United States of America. So I will say happy Thanksgiving. And of course, have a fantastic weekend. I did read something a while ago that said that we should always strive to have more gratitude in our life in general. So, even if you're not from the United States or you don't celebrate Thanksgiving, maybe take a bit of time after this video to work on some extra gratitude for things that we're all happy for in life. But thank you as always, and yes, a happy Thanksgiving to those that celebrate it. Plenty to talk about in this video. I'll go through the personal updates first and what's going on the Contrarian Capitalist channel. Then, of course, we'll have a look at what's been going on in the markets. Quite a lot going on as per usual. And we'll finish off having a look at the UK. And the reason for that is having a look at various budgets and reactions to the autumn budget. First of all, I should say a big thank you to everyone for bearing with me the last couple of weeks. There's been a lot of written articles in the last few weeks. The commodity wrap and the market wrap haven't been as in depth as normal. Again, the reason for that is I have been in Paraguay sorting out temporary residency. I'm glad to say that that process is now finished in terms of all the paperwork. I'll be heading back there next year in order to get the cedula or the ID card. So thank you for bearing with me on that. There's plenty going on in Asuncion. I've met with loads of different real estate developers, people that are investing in properties down there as well, getting an idea of the business culture down there. And I've come away thinking that it seems to be a very pro-business country, which is good. It also sits on a massive water table, so it's water secure for, I believe, up to 400 years if it doesn't rain between now and 400 years time. Also, because of the Itaipu Dam in the east of the country, it means that it has all the electricity that it needs as well. So from a very fundamental point of view, that's very good. Also, it's very favorable in terms of the way that it taxes its citizens as well. So we've got low taxes, we've got water secure, food secure, very, very good. And it seems very business friendly as well. Very warm is what I'd say to that as well. I've come back and I'm up in the mountains up here, and yeah, it's a bit of a difference from being down there. The point being that because I was away and dealing with immigration, dealing with a multitude of paperwork, etc., therefore that's why there was a lot of written posts, and a lot of them were put behind a paywall, which I don't normally do, but again, that was to compensate for the commodity and market wraps not being as in depth as usual. I should say that if you are yet to subscribe to the Contrarian Capitalist, please do so, contrariancapitalist.substack.com. And if you have a look at the post that will come with this video, then there will be a Thanksgiving special offer as well for the Thanksgiving weekend. If we have a look at the markets, we'll have a look at what's going on at present. Now, I know that Chris Steadley and I have spoken about seasonality before, and we have said that with seasonality, it's been a bit skew with this year. So when certain things should be doing well, they've not been doing well. When things shouldn't be doing too well, they are doing well. Loads of different things going on. But what's interesting, and again, I say this on Thursday, the 27th of November, what seems to be happening here is that we are getting that end of season bounce, so to speak, or the end of year bounce. So we'll start with the equities markets. So again, we've got the S&P 500 sitting at 6,800, up 3% on the week, up 200 points on the week. We've got the Nasdaq up 4% on the week, just under 1,000 points. It sits at 25,230. We've got the Dow Jones again up on the week, 2.56%, up just under 1,200 points. That's sat at 47,420. The VIX index has completely gone in the opposite direction, which is good. So last week, or the last 4 weeks, it had been on an upward trajectory, so insinuating that volatility was increasing, but that seems to have dropped off a cliff. this week so far. That is down 6.25 points. It's down at 17.18. In effect, anything between 15 and 25 shows that the markets are in a normal level of volatility. So nothing new, but it's a significant drop nonetheless. And of course, the dollar index last week done well and actually closed above 100. But we see now that it's starting to maybe take a turn again to the downside. It sits at 99.53. So that is down on the week thus far. So yes, seasonality getting involved. Of course, I know there's a lot of market activity before, as they call it, Turkey Day as well. I should point out that the commodity wrap and the market wraps, they're going to come out at usual time because I believe that most of Asia and Europe will be open on Thursday and Friday. So I will wait for all of that to happen first, just in case there's any shocks to the system. So yes, the commodity wrap and market wrap will be with you on Friday and Sunday, respectively, as per usual. Going on over into commodities, and again, bear in mind, I flew back and got back into Mexico late yesterday, so I haven't been able to sit down and go through absolutely everything news-wise. Looking at the charts as I can see them, gold is up at $4,157. It's up $93 on the week, so that's up 2.31%. Silver, I believe, is up even more as I just bring up that chart itself. Silver is sitting at $53.22. That is up $3.23 on the week so far, up 6%. We're seeing that's quite buoyant. Again, I know there's a lot of different underlying factors as well going on this week. And it's not just going to be reaction to, budgets and things like that. Again, what I'll do is I'll link to a couple of posts that I highly recommend that you read on to follow up more in depth with gold and silver. Looking at oil again, I'm just looking at WTI here. That is up on the week by 86 cents. It is up 1.45%, currently at $58.81. And two last things to look at: platinum. Platinum is up again. It's followed the trend of gold and silver as such, up $91 on the week, up 6%. That is trading at $1,603. And finally, we'll have a quick look at palladium again, just to check in with it. Again, following the trend, it is up on the week. It is $46.60 up on the week, 3.39%. Currently trading at $1,424. So that's where we stand at present. Again, what I can see from all of this is that we could actually be dealing with that end of year trend. And again, the November and December are normally quite good for the markets in general. Now that could be because people are selling positions or people are getting their final hedge fund accounts in and make everything look even better than it is. Again, I'd exercise caution, but for those that have been following the channel for a while, you know that I've said that it should be a case of onwards and upwards regardless, no matter what the market chucks at us, to be fair. And again, the reason for that is I think retail will continue to step in and buy the dip. I think that the game has got another 12 to 18 months to go, personally. And we have to remember that even if we're not from the United States or not American, that the midterm elections are going to have a big part to play, because I'm sure that President Trump and team do not want to go into tentatively balanced midterms with a bad looking stock market. Now, the reason for that is that if they are able to secure or enhance their lead within the House and the Senate, then that's going to cement the Republicans until 2028. In my opinion, that will likely mean that whoever that succeeds Trump is very much likely going to be a Republican government from 2028 onwards as well. The point being that between now and the midterms, they're not going to want to see a weak looking stock market. So they'll do anything I think they can in their power to make sure that the markets are looking good. I know there's a lot of risk concentration. I know there's a lot of talk about AI. I know there's been a lot of fallout about Bitcoin's price movements recently. I should point out that Bitcoin is now back over 90,000 dollars, just as an FYI. But they're not going to want to see weak markets. And therefore, I think that it's going to be a case of onwards and upwards for the next 12 to 18 months. That's my personal opinion. And I've been saying that for a little while on the Contrarian Capitalist as well. As mentioned, what I'll do in terms of gold and silver, I will link to a couple of articles that I highly recommend that you read. I will link to that in the post that comes with this video. There'll also be a Thanksgiving weekend special offer in there as well. As always, if you haven't yet subscribed to the Contrarian Capitalist, please do so. But also do allow me to serve you at a high level by becoming a paid subscriber as well. Going on, just before we go on to the UK, I should also point out that there's been a lot of things going on over in Japan. And again, I'll link to a post as well that I think you should read. They got 1.7% on their 10-year yields. That's the highest that's been since 2008. Japan's debt to GDP ratio, I believe, is about 227%. It might be 237%. It's north of 200% regardless. It's not very good. The yen carry trade, which I've written about before on the channel, that is starting to blow up. Again, I highly recommend that you check out the YouTube video that comes with the post. That is between Daniela Gambone and Clem Chambers. Clem's been on the Contrarian Capitalist podcast before a couple of times, so he's very, very clued up with what's going on. And again, the reason I say that is that many people indicate that if the markets were to explode, so to speak, then it would likely start in Japan. They have an almost untenable situation that they've been trying to, have a balancing act for the last 35, 45 years. It seems like it's slowly coming to an end. But again, as I forget who it was, it might have been Hemingway that said, how do you go bankrupt? Slowly and then all at once. So it could be the same case here. But watch out for Japan, without a shadow of a doubt. Moving back close to home, and I appreciate that there's quite a few listeners here from the UK. You'll know that the budget, the autumn budget, has come out. It came out today, actually, on Thursday, the 27th of November. Yeah, not very good is the summary of that. It's to be expected as well. Now, I'm not going to go through absolutely every single thing. I'm focused on the property side of things and look at the general UK growth, inflation and debt numbers. Again, I'll link to the full article so you can go and read it for yourself. But things that I've taken away from all of this, number one, it's not a good budget. It's basically taxing more to spend more, which I think that just proves to many people that the end game is here. The UK sat on £2.7 trillion worth of debt. We've got a lot of socio-economic challenges that apparently being celebrated in a different article when they're looking at the fact that net migration in the UK has dropped sharply to 204,000 in the year to June 2025. I'll go through that in a bit. Going back to this budget, in effect, in terms of UK growth, inflation and debt, what it says is that it predicts that the UK economy will grow by 1.5% in 2025. That's upgraded from a 1% forecast in March of this year as well. But the economy is now forecast to grow by just 1.5% on average between 2026 and 2029. That's down from the previous estimate of 1.8%. Inflation, again, take inflation numbers with a pinch of salt. But they say that it's predicted to average 3.5% this year in the UK before falling to 2.5% next year and then returning to the government's target of 2% in 2027. Well, I could tell you now that's a load of BS. Do not see that happening anytime soon. Again, because they're going to try and tax more people are going to leave, and you are having an increased social state as well. But I've read that 1 in 4 people are on some form of benefits as well, and that's not sustainable. I don't care what country you're from, that is not sustainable. So, of course, if you need to get the printing presses going because people aren't paying their taxes, because people have left the country because of your taxes, voila, that inflation rate is hogswash. Not going to happen, in my opinion, but we will see. So if you're wondering if the UK is a business-friendly place, no is the answer to that question. Thresholds for national insurance paid by employers also frozen until 2031. Tax exemptions, gambling duties increased, loads of different things going on there. Then the other one, housing on property. This has created quite a stir, not just because of a property background that I have, but I think a lot of people were not happy by this at all. And that is that properties in England worth more than £2 million are going to face a council tax surcharge of anywhere between £2,500 to £7,500 following a revaluation of homes in bands F, G, and H. So I won't bore you with council tax band information, but it was basically done. They've basically been done on 1991 valuations in the UK. And as we've seen, I know the property market in London specifically has started to show serious signs of decline. So not everyone's going to be living in a house that's worth £2 million. I understand that, but even if you look at the wealthier boroughs of London, for example, quite a few houses are worth over £2 million there, and then certainly in the more plush parts of England too. So the fact that there's going to be surcharges there isn't good, because it puts people in a predicament of, if you have a house that's valued at that, can you afford the extra council tax charges? I would imagine you could, but it's not a guarantee. But then if you're going to sell, then is it going to be attractive to anyone that wants to buy it because of the surcharges? And you just get, I think, this death spiral. It's really not good, really not healthy. Also, tax charged on rental income is going to be increased by 2 percentage points from April 2027 as well. Again, I've said this before. I'm pretty sure that all of this is designed to have someone like BlackRock come in and basically buy the UK property market moving forwards. Part of that bigger agenda, shall we say. That wouldn't surprise me if that were to happen. And also for people in the UK as well. Normally you can put in up to £20,000 tax-free into various investment vehicles, ISAs, etc. That's being cut back to just £12,000. Again, that's not very good as well. And I speak to a lot of friends in the UK, and we talk about not just budgets, but we talk about what's going on and why it's happening. The why is a completely different story, but the advice, and not financial advice, I should say, that I give to people is always the same: that your government doesn't like you, especially if you're again in Western countries. Your government doesn't like you. They want to tax you. They probably haven't heard of a Laffer curve, and it's dangerous. And again, with everyone that's being allowed in this case to the UK, that is creating a melting pot, and not a good one. So what I would do, and what I'd be looking to do, and a plan B isn't for everyone, but if you want to stay, sorry, in your own country, and you want to fight, and you can see what's coming down the road, and that's what you want to do, great, problem solved. If that's your decision, I'm okay with that. But if you're looking at all of this and you get concerned about, well, they're increasing this tax, or they're not being business friendly in this point of view, or this is going on, or I don't like this, or I don't like that, then rather than sit around and complain about it, we have to take action, which is why I suggest to people, go and get yourself a plan B. Go and get a temporary residency or permanent residency in a different country. It could be, well, you could do what I've done. It could be Mexico, it could be Paraguay. It doesn't have to be those countries. Every country is going to have different requirements, different limits. But the point being is, if you don't like where you're living, or you can see that the writing's on the wall, then go and do something about it. These don't have to be elaborate, expensive solutions either. So again, have a look at your plan B. Secondly, you want to get out of the monetary system as best as you can, and gold and silver, platinum as well, are the main things here. Now, I know people will argue about Bitcoin all day long. I don't know as much about Bitcoin as I do about gold and silver, which is why I don't talk about it as much as I should do. But gold and silver, get yourself some physical gold and silver if you haven't already done so. That will, they'll both be designed to be inflation hedges, more so gold. Silver's got a lot of industrial uses, but there are supply issues in both gold and silver, more so silver. And again, with all the printing presses being fired up, and people that are going to be leaving countries because they don't like the tax regimes in these countries. I go back to Japan and what's happening there with their 10-year yield hitting just north of 1.7%. These things aren't healthy. They're a sign of a financial economy that's not healthy, and it's only going to get worse. I really do truly believe that. So the whole point of this channel as well is to again, get that information out to you and say that, hey, you don't have to be where you are if you don't want to be where you are. You do have the option of getting out. Again, go and take your plan B. Go and look at gold and silver. And I always say that I'm open for questions. If you've got any questions, any queries, any issues, just send me a DM on Substack. I'll do my best to address any issues. Or, of course, if you're a paid subscriber or founding member, just ask me in the chat group as well. I'll always do my best to try and help. I've done it. So, again, if I can do it, I'm sure you can as well. Just going on to net migration in the UK, and I want to finish on this because, again, I think that it's interesting how numbers can be spewed in any way that you want them to be spewed. And again, this comes from the fact that UK net migration has dropped sharply to 204,000 in year to June of 2025. Now, people look at that and go, well, that's good. Net migration is down. That's absolutely superb. Just in case you're not aware, net migration is change in population due to migration, the difference between the number of people arriving and leaving. The provisional figures show that 70,000 more EU nationals left than arrived, while 109,000 more British nationals left than arrived. By contrast, the net migration figure for non-EU nationals was 383,000. I think that says everything you need to know about what's going on. Home Office data apparently shows 110,000 people claimed asylum in the year ending September 2025, while there are just over 36,000 asylum seekers that were apparently in hotels in September of 2025. I'll go back to that figure. 109,000 more British nationals left than arrived. This also links back into the budget and links into taxes, that if you continue to treat your citizens like crap and you continue to want to tax, and as we can see in the UK, it's not an overly productive country at the moment. It's not likely to be moving forwards. It's become more of a welfare state because of various things that have been going on. Therefore, what's going to happen is that more people that are going to see the writing on the wall are going to make the choice to leave. Now, they might not want to. Some people might have to leave. Some people might not want to make the choice to leave, but they realize that it's in their best interest to do so. I'm not talking, people like me, for example. You're talking about millionaires. I think there's even a tech billionaire, I forget his name, who said he's off to Dubai just because that's where everyone else goes. And because, again, the writing's on the wall. He doesn't want to be in a police state and in such a heavy tax state. And so, again, if you continue to do that to your own citizens, they will, number one, they'll probably revolt at some point. And I think that might happen. I don't want it to. I'm not encouraging it, but I do think it will happen at some point. But 109,000 more British people leaving than arrived, I think that says everything you need to know about the state of what's going on. But of course, again, the way that the news will spin it is that net migration's dropped. This is fantastic. We need to get down to a much lower figure. We've achieved that. Well, yeah. But if you're bringing in the dregs of society, and you are seeing people that are wealthy that are leaving, then you are also not increasing your tax base, because if you're bringing in the dregs of society, the chances are they're not going to be paying taxes anytime soon, and they're going to add to the burden of the welfare state. So again, you've been no surprise I'm reading this from the BBC, who again, I still want to see Trump sue them, but that's a different story. Point being here that, again, the way that the headline is, it's spun to say, hey, net migration's down, this is really good, onwards and upwards for the UK. But actually, even if you just take 5 minutes to deep dive into it, it's really not healthy what's going on at all. And you need to understand the reasons why. And again, I put a lot of this down to taxes and the way that citizens are being treated, and that people can see the writing on the wall. And again, I know that you can still be relatively tax efficient in the UK. Again, if you've got the right accountant, you've got the right tax expert, you've got the right power team, absolutely, you can still be tax efficient, but it's starting to become more and more difficult as we move forward, which is why you should take your capital where it's more favored. I said this last week, and I'll say this again quickly before we sum up. That if you look at Paraguay, for example, the rate of tax in Paraguay is about 10% if you're earning cash for within Paraguay. So if you're a foreigner and you're in Paraguay and you're earning your income in Paraguay, so you've got a Paraguayan business, for example, then your rate of tax is 10%. If you are in Paraguay or your tax base is in Paraguay and your income is being earned from abroad, your tax rate is effectively 0%. There you are. So, again, Paraguay is a different country from the UK. I understand that. But this is why you're starting to see more and more people go to places such as that. And it was amazing, even the amount of Western Europeans and Australians that I was speaking to in various network meets saying the same thing. Oh, the UK, what's going on in there? That's a bit of a, sore spot at the moment. They were talking about Australia. And it's like, well, we've got an exit tax here, and this is what's going on in the government. All that. You've got Belgians, you've got Dutch people. Again, they're saying very similar things. Now, I had said to my wife before that when we go and do this networking, you're going to be taken aback by what people are saying, because I think sometimes she might think that it's just me going off on one in order to just assault my own country. But to be fair, she came away amazed at, well, I've got a Belgian person saying this, I've got a Dutch person saying the same thing, a couple of Australians saying this, I've got other UK people. Wow, it's so again, this is happening. So you don't have to be stuck in whatever country you're in as well. You can go to where capital treats you best. And I've always said, if you're a paid subscriber and founding member, just DM me on the chat. I'm happy to open a conversation. But if you're a free subscriber or you're not even a subscriber yet, number one, please do become a subscriber. Secondly, send me a DM on Substack. I'll always do my best. Working on some things in the background. And again, I'll be able to point you in the right direction. Again, it might be through people that I've used before. Because if I'm going to recommend something, I either want to at least have used it before again making that recommendation. It's the same with Bullion as well. We talk about Bullion a lot. Again, I've got some things going on in the background where I'll be able to put forward to yourselves as subscribers moving forward. So that is where we're at. It is Thanksgiving. It is the 27th of November. Again, for those who celebrate Thanksgiving, have a fantastic day. Have a good Thanksgiving weekend as well. As mentioned, if you look at the post that comes with this video, there will be a Thanksgiving special offer. I'll run that until Monday on annual subscriptions. So again, thank you in advance for taking advantage of that. We're seeing a lot of buoyancy in the markets. Again, not just equities, gold, silver, platinum, palladium as well. Even oil is up slightly on the week. Again, we're going into that end of year buoyancy. So it seems as though sentiment and it seems as though the dynamics are playing out as they should do, which is, as we said at the start of the video, unusual for 2025. And then, of course, we've had a very brief look at Japan and then gone back into the UK with their budget. A lot of news articles that I'll link to. Again, that special offer is going to be in the post that comes with this video. So again, if you're not yet to subscribe, please do subscribe. Contrariancapitalist.substack.com. And then when you see in your inbox this video come in, then again, you go on there and you'll be able to take advantage of that Thanksgiving weekend special offer. I should say as well, big thank you to two sponsors. Number one is Polymarket. Thank you for being back on working with the Contrarian Capitalist. And also I should say that Adam Fayed, who again deals with various things around the world with regards to residencies, taxes, investments, real estate, all of those sorts of things. He's offering a free call, should we say, a free strategy call with any Contrarian Capitalist out there as well. That call's worth $700. It's no obligation. It's completely free. So you'll get it for free. It's a 1-hour call with Adam and his team. And again, that will be in the post that comes with this video as well. So if you're in that position where you're not quite sure what to do and you want to have a chat with a seasoned professional, I highly recommend you take advantage of that call with Adam and his team. And again, it's no obligation at all. Have a fantastic Thanksgiving, and again, enjoy the rest of your weekend. I'll be back with the commodity wrap on Friday. I'll be back with the market wrap on Sunday. And then from the start of December, it's a very podcast heavy week. Yes, the podcasts are back because I'm back. in Mexico. So there's a lot of podcasts coming your way from the start of December. Take care, reach out, and remember, please do subscribe and allow me to serve you at a higher level by becoming a paid subscriber as well. Take care.